Welcome to MasterMind Minutes, the podcast that focuses on the franchise industry. We'll cover topics that are important to franchisees as well as franchisors and share interesting insights that will help you build your business. We have one guest, we ask one question, and we do this in minutes, not hours. Well, hello again. It's Gary Occhiogrosso, and this is another episode of MasterMind Minutes. Many of you who may be joining us today for the very first time, MasterMind Minutes, as you know, or don't know because it's your first time, is a pretty simple concept. We have one guest, we have one topic, and we usually get an answer to a question within minutes, not hours. As we always say, we know that that's probably not enough time to really get into the topic with the individual guest, and we understand that. So we'll give you contact information, and we will go from there as we get into the program. So today, my guest is a longtime friend and associate in the franchising business, Bob Tobias, and he has a very interesting platform, interesting company, which we're going to talk about, and it's called Elite Franchise Capital. And as the leader of Elite Franchise Capital, Bob's cultivated a successful career in spanning 2 decades, although I may know you longer than that, specializing in strategic investments with emerging franchise brands, which is right up my alley, what I love. Under Rob's guidance, the company has pioneered a distinctive approach to franchise development, combining intellectual capital with strategic funding to foster growth and synergies. Rob's experience at Vista Massage further underscores the expertise in brand expansion. And a very successful guy, been involved in franchising for a long, long time. Rob, thank you so much for being with us here today. And you're a good friend of Franchise Growth Solutions. I know that. Before we get started on the question, why don't you tell us a little bit more about what you're doing and maybe give us some more background on Elite Franchise Capital?
Sure. Gary, pleasure being here. And yes, I've known you since Ranch One days, met you at the corner across from FIT, I think 25 years ago or more. So it's been a couple of days. I had actually darker hair at that time. Mm-hmm. So having been in the franchise sector for that long, myself and four of my partners came together a couple of years ago and thought that we had a better way of doing things. Franchising is all about development. Without development, you don't have anything. And so franchisors need people to develop franchisees. And we have a roster and a network of successful multi-unit operators. And what we do at Elite Franchise Capital is match them, our roster of people, with emerging brands. And why will they do that with us? Because we have come up with something that's very unique and not been done. Our franchisees can participate in a liquidity event for the brand that they help grow for the first time. They can participate on the franchisor level and get extra money above and beyond what they've done at the operational level. And that allows them to take a look at emerging brands, which are riskier because they get more reward. And this unique approach has really resonated. We have 2 franchisors that we've signed on. We're only looking for 5. We have multiple people that are approaching us because as the franchisor, we allow you to maintain controlling interest. You run your brand, you own your brand. We're just there to help you develop. And again, we have franchisees that want to do this because they now get rewarded for helping brands grow, which they didn't get before. Mm-hmm. And last, our investors, in PE, they're called limited partners, but for us, they're not. 90% of our investors all come from the franchise world. They have hundreds of years of cumulative knowledge that we use to help pay it forward, to help mentor, coach, train, teach our emerging brand franchise partners and our franchisees. Mm-hmm. So that's what we're about, something that's very unique in this franchise world.
Yeah, certainly unique. And I think that's really, and that's a great setup, so to speak, to the question, because today and I guess Really, I'm going to say the last 10 years, but I know that private equity and franchising started probably back in the late 90s. At least that's when I became exposed to it. But I think back then, private equity in its traditional format, you know, would buy a franchise company, and quite honestly, through my own personal experience, they didn't know what to do with it. They had no idea. They thought it was just about putting money in and they were going to flip it, and like you're buying passive stock on Wall Street, so to speak. But today, and certainly in the last 10, predominantly the last 5, traditional private equity is all over franchising. I mean, they own everything. And I understand it and I get it. But the part that I don't always agree with, and this is no knock on private equity, because I'm going to have Sean Whitehead on the program in a couple of weeks, and he's more traditional PE and franchising. Yeah, not to say one better, one worse, just different. But one of the things that I always look for and coach our franchisor clients on, if you're going to go down the path of raising funds, raising money to grow your franchise brand, maybe to take it from that early entrepreneurial level to the next level, and then above that, you're going to need money. Obvious. However, you also need knowledge, experience, other pieces, parts to the puzzle. And that's where I think sometimes private equity may fall short, because they're good at writing the check, but they may not have experience in a particular segment, in a particular business. They may not have those connections to, let's say, real estate, or you mentioned multi unit franchisees. So I think when founders of franchise companies are looking to grow, they need to find more than just a person that's going to write the check. They need to find the person that has the strategic partnership, the knowledge, and the experience. So that's where I see your company sort of separating itself from the pack, so to speak, the traditional PE pack. So talk to me about, and our question really, I guess it's kind of an entangled question. One is, do you think franchising has sort of hit its peak in general? And more importantly, where do you see strategic partnerships such as your company helping franchise companies grow to the next level, irrespective of simply writing a check?
Yeah, Gary, really some good points. So let's go through that. One, the whole idea behind tag along rights is which is what our company is founded on, resonated with me when Quiznos, which I was part of, and I developed the Metro New York market. And so I got a peek under the tent when PE was looking to buy them, and I saw the prospectus and saw the $2 billion valuation, and I was like, wow. Then you really understood the value that money, PE, Wall Street placed on franchising. And as you said, that was 20 something years ago. Over time, more and more money has come in because franchising is almost a $1 trillion business. Right? So there's a lot of people that want to come in, and PE looks at it and says, wow, royalty is an accrual. It's easy to monetize, it's easy to look at. And there's a place for that because you need money to develop. But it's what you said, money by itself doesn't buy development. You want to find a strategic partner that can help you at each stage of your growth. And at each stage, there's different types of people that you need. We're the predecessor to traditional PE. We come in at early stage with a brand, and we're there to help them develop, open locations, put systems in place. We don't give them money per se. We give them development, which gives them traditional royalty and franchise fees. But if you're looking for partners, it's to what you said. You can't just look at money. Money is really enticing, right? It's that devil and angel that's sitting on your shoulder. The devil's like, take the money, take the money, take the money, right? But you need more than money to grow. And you need to make sure that there are people there that are going to help you grow appropriately, support your franchisees, have the highest average unit volume possible that you can. Because if you do all of those things, then your franchisees will be successful and your business will be worth a lot more. And
Mhm.
that's where we come in. We're there to help holistically do that.
And that makes perfectly good sense. And I definitely want to take a deeper dive into that. We're going to just take a very quick break and we'll be back. And then I want to talk about the individual areas where partnerships, strategic partnerships, really help foster the growth of a franchise company. So we'll be back in just a minute. Hey folks, Gary Occhigrosso here, managing partner and founder of Franchise Growth Solutions. We're the premier franchise advisory, franchise development, franchise sales organization. What I'm here to ask you is, are you sitting on a gold mine? Do you have a restaurant, maybe 1 unit, 2 units, and you're considering expanding, but you don't know how? Perhaps you don't have the capital, you don't have the manpower. Well, then the answer may be to franchise your business. I don't know. We'd have to take a look. Get in touch with us. We'll do a complimentary franchise evaluation and we'll let you know whether or not your business qualifies as a franchise. You can expand it regionally or nationally. We'll show you how to do it. Okay, we're back. We're talking with Rob Tobias from Elite Franchise Capital, and we're talking about sort of the difference between traditional private equity investment in a franchisor and a franchise company, and really sort of the approach that Elite Franchise Capital plays in the development of a franchisor. And we talked more about being more of a strategic partnership. You mentioned the cumulative total of experience of the folks on your team. Let's just sort of maybe hit a few areas, and if I leave anything out, please add it. But from your point of view, whether it's a different strategic partnership platform or Elite Franchise Capital, what are some of the areas where you might be helpful to an emerging brand in areas such as real estate or supply chain, or you mentioned about bringing experienced franchisees in the loop, or financial management? How do you help in all of those areas, help grow the brand? Because if I understand correctly, you're what I refer to the kiss at the end, is really at the end. So you're looking to build value because you don't get paid until the end. So talk to me about those topics, those segments where you see franchisors that may have great concepts, but they're lacking in certain areas on the corporate side, where you come in and you say, hey, let me help you with this or that or whatever.
Yeah, great points, Gary, right? So 100% is what you said. If you understand how people make money, you understand what motivates them. And for Elite Franchise Capital, the only way we make money is getting our franchisors to a liquidity event. So, and at that liquidity event, getting the highest multiple possible. There's a big difference. And so we want to take a look and say, okay, who's the acquirer and what are they looking for? And let's check as many boxes as possible. And that's what we're motivated by. So we have a long view on this. You and I talked about something a couple of times, and a known in this industry is almost all franchisors started off as an operator. They had a pizza place, they had a gym, they're operators. And as they grew a couple, they were successful and they're like, hey, I want to grow more, but I'm not going to do it corporately. Let's look at franchising. And then they get into franchising. Well, there's very little commonality between an operator and a franchisor as a company. They're two totally different businesses. And so they come into this franchise world not knowing how to do almost any of this, and they need help. And that's why they approach your company, and my company is they need help. And so we're there to take a look and say strategically, they have $1 to spend at each stage. How should they appropriately divide that $1? Is it development? Is it marketing? Is it franchise support? Is it finance? Like they need all of these things, but they can't do all of it at once. And our job is to help them prioritize and find solutions to each of those metrics.
Mhm.
And that's what we're there to do, is to help them, because again, we only make money if we actually help them do that and not just talk about it.
Yeah. Yep. No, I listen, I get it. It's interesting. So at Franchise Growth Solutions, what we do is we really get invested, not financially, but we get invested on many different levels with our franchisor clients. So, for example, we have a complete advisory section where we will sit with the franchisor and help them with things like real estate and supply chain and architectural and design. And people in the other, in the franchise FSO, franchise sales organization world, my friendly competitors will say to me at conferences, "Why do you do that? Why don't you just sell franchises?" And my position has always been the same over the years, and that is the better the product, meaning the franchise business model, the simpler and more credibility we have when we sell it. Keep in mind, it's also morally correct, okay? But it's a better way of doing things. So, what I'm hearing here from you, and I want to really understand it, is you're looking for the holes in their system, so to speak, and you're filling those holes so that they can elevate the entire company, the entire franchise company, creating more value, thereby creating a higher multiple at the end. Typically, and again, traditional PE, not all, but some, they don't really, they don't, they don't really get involved in any of that. It's almost like they're baking a cake. They let it bake and then they flip it. They sell it. They don't do much of anything. But you're in there and you're doing things to actually create that value. Do you have a set timeline? A lot of PE firms, it's like, well, 3 to 5 years and we're flipping it. Do you have a set timeline for this, or is this sort of you're gonna look at it as it grows and determine the best possible time for exit? How does that work for
Yeah.
you?
So starting at the end, we're not traditional PE at all, right? Uh,
Right.
and because we're a development company and we're starting with emerging brands, our goal is to get at least a couple of our brands above the 100 unit mark. Well, that's going to take time. It's not like you can acquire multiple locations. You have to go out there and open them up, and opening them up takes time. So our realistic horizon is 5 to 10 years to get a brand to where it needs to be, that it would be acquired at an appropriate valuation.
Mm-hmm. Mm-hmm.
Then we want to take a look and say, okay, how do we answer those questions and how do we solve those problems? Because this is not about talking about something. This is actually getting it done. Because once again, if we don't actually open up locations and all we do is talk about selling, the proverbial snow in franchising,
Right.
sold but not open,
Yes.
we get nothing for that. We have no commission. We have nothing off of that. It's only those locations in our portfolio that are open at a liquidity event do we get compensated for.
Right.
So we're motivated to look, how do we get them open? And to your point, this is not about finding an operator just to get open. We want to find the right partner for each brand, that they get open and optimize that location and continue to develop, because that helps everybody, the franchisor, the franchisee, and our fund.
Yeah.
So that's the unique difference for us.
Yeah, and again, I mean, you and I are absolutely on the same page. Of course, we have different ends. Our end is to do a franchise sale and to help that brand grow and to maintain them as a client. We're not in at the end, at the exit. And again, I just think that that's a better way of doing it. I have another topic that I want to ask you about, but I need to take another break, and then we'll be right back and we'll talk about that.
Hey everybody, this is Steven. I'm the founder of That One Painter, and I was connected with Franchise Growth Solutions a couple years ago. And at that time, we were a business that was growing, but we wanted to grow even further, and we were considering franchising. They helped me put together manuals and procedures for my franchisees. They really explained what that relationship was going to be like between franchisor and franchisee, as well as they helped me with the FDD and the FA and walked me through that entire process of getting all that ready. already. Gary and Fred were a wealth of knowledge through the entire process of building our franchise system, and I cannot recommend them highly enough. We launched our franchise system, I think 16 or 17 months ago, and we're now at 43 units. We've been blessed. It's been a lot of work, but we were able to get that ball rolling because of the help of Franchise Growth Solutions, and now we're on our way to painting the galaxy. So if you're considering hiring them, I highly recommend that you do.
Okay, we're back. Actually, we didn't go anywhere. We were always here. You're back. Maybe you got up and did something, but we're talking with Rob Tobias, I'm sorry, over at Elite Franchise Capital. And, you know, Rob, one of the questions that I want to ask, and I mentioned to you in the break, I have a lot of PE firms that'll come to me and, you know, they'll ask about brands. Can I introduce them to brands, almost be sort of the guy that's helping them with deal flow, as they say. And my first question to them is, sure, but what's your sweet spot? What are you looking for? And very often, you know, I'll hear things like, well, they've got to have an EBITDA line of X, or they need to have X number of operating stores, whatever it is. So given your platform, given your approach, which is different because you're really looking at emerging brands and growing them. And I realize that, you know, free cash flow, you know, EBITDA line is important. I get that. But beyond that, what are you looking at in terms of a management team, concept, track? Can you talk a little bit about who's your ideal candidate for you to sort of take under your wing to grow?
Yeah, Gary, great question. So when we first started this, we were like, hey, we're going to look at this. We want 5 brands. We're going to look at 5 different verticals. We want to be, you know, kids, because they're recession proof, and pets, right? Because people are always going to spend money on kids and pets. We wanted to be in fitness because we have a lot of investors and my partners that come from the fitness world. You know, I come from restaurants, so we looked at all of those. At the end of the day, what it really comes down to is you have the service or the widget. And we want to find that service or widget that has potential. Yes, we want to look at certain verticals, but the service or widget really matters where it's not a fad. It has an ability to have national growth, and we care about that. But let's call that 49% of the vetting process. Because we're in so early, we can't really look at royalty stream. They're so small. You know, our brands maybe 5 to 10 units in total system. So we spend a deep dive on who are the founders, who are the equity owners in this. Right? That's 51% because we're getting in bed with these people. They have control over this. We don't take over 50% of a company. We don't take any equity in the company. And so it really, really matters who these people are, that we feel that we can be comfortable with them. And what we like to say is they're vulnerable to say, we don't know what we're doing. We need help. But once we help guide them, there's nothing that's going to stop them. They'll run through a brick wall. Mm-hmm. So having those attributes are really key for us.
Yeah. Look, I think it's always all about the people.
Yeah.
So before I ask you for your last thought on this, I need to ask you something first, and that is, you just said something that sort of hit me in the head here. You said you don't have equity in the company. Are you, maybe you can clarify.
Sure.
So your agreement arrangement with the franchisor is really a percentage at sale, not based on I have X percentage of ownership, or can you, again, I don't want you to give away any trade secrets, but can you tell me how that works? Because that is outrageously intriguing to me.
Right. And so it's outrageously intriguing to our franchise partners because, again, when a lot of PE or money looks to come in, they want controlling interest.
Absolutely.
And for a lot of them, they feel like they're giving up their baby and they're now going to become indentured servants to someone else.
Yes.
Our model is based on what's called tag-along rights. And without getting into the exact formula that we use, it simply states at a liquidity event, how many locations are under the EFC umbrella as a percentage of system-wide locations or royalty? It's more of a royalty. And we get that percentage of the liquidity event. So we have a seat at the table to help make decisions, but they control their interest. We have non-voting rights in that, but the percentage that we receive is based on what we actually developed. And that's why I hit on that multiple times during this podcast, is that it's all about actually getting locations open. That's the secret sauce for EFC. Right?
Yeah.
It's not about just talking about something. Too many people are out there talking. And that's where, again, you and I align. Right? There's people can talk, but can you walk the walk?
Yeah.
Our fund was started, the five of us started this because it's about walking the walk and showing people how to do it. And if we do that, then everybody prospers.
Yeah, look, I'm going to tell you, I think what you're talking about and what we talk about and what we practice really, although I will say, and it's something that sort of pisses me off about this business the last couple of years, and we got franchisors out there pounding their chest about, they've sold 300 units, and then you come to find out they got 50 units open or whatever, and
Yep.
that's a whole nother story for another day. But people have been using, and IFA has been tossing around, responsible franchising. And listen, I'm all for that, but you got to sort of put your money where your mouth is. You can't just talk about it, as you say. And what my company does, what Franchise Growth Solutions does, is we absolutely positively practice and work with the franchisor so that they are able to execute the concept of responsible franchising, meaning unit economics for their franchisees making money, help them with supply chain, real estate, show them what to do. That to me is the essence of responsible franchising. And I'm sure what I just heard you say about how you're working with concepts and franchisors to grow them is the same thing. And maybe to underscore that is, unless that happens, you don't get paid. So
Exactly right. Gary, we couldn't be more similar in that regard. That's why we know each other for so long.
yeah,
I've been and I've seen the good, the bad, and the really ugly in this business.
yeah,
And there's a lot of people out there that are trying to make their way on the graves of others. And that's not what we're about. At EFC, it's about we all go there together. We're all aligned to get that franchisor to a liquidity event. That means franchisee, investor, and franchisor are all trying to do the same thing. And if we accomplish that, everybody prospers.
yep,
And
yep,
that's not what's happening. And this business, which, as I said, it's approaching $1 trillion. There's a lot of people entering this simply to make money for themselves. There's nothing wrong with making money. We're here, right? This is not a charity case, but you can make that money by making a difference. And as you said, responsible franchising. There's really good brands out there. There's really good people. And we're about how do we bring all of that together? And if you do, then there's a lot of money to be made. There's a lot of development to be made. And there's a lot of prosperity and happiness.
yep. I couldn't agree with you more. Okay, is there any last thought you have on this topic, either of strategic partnerships or on elite franchise capital? Any last thought that you can leave our audience with?
Sure. First, just go to elitefranchisecapital.com. You can find out more information. You can find my contact information there. Look, we're looking for 3 more brands. We're looking for franchisees to help develop. We need 25 to 40 more franchisees to open up these locations that we're going to do. Less concerned about the money because the money will come in. If you want to be part of this, if you want to be part of a brand that is trying to do the right thing, give us a call. We have a lot of things that are really enticing for both franchisor, franchisee, and investor. And
Great.
I want to thank you, Gary, for this opportunity. And again, we've known each other a long time, and there's a reason for that.
Yep. No, I think it's a fascinating topic, and I thank you for your time. Folks, we've been speaking with Rob Tobias from Elite Franchise Capital and the topic of strategic partnerships and investments and payouts at the end for franchise companies. Rob, thank you so much for your time. I truly appreciate it. I look forward to seeing you in person. I don't know if you'll be at IFA coming up, but I will see you in Las Vegas. And again, thank you so much for your time. I truly appreciate it.
Thanks again, Gary.